Welcome. You're watching the Mutual Fund Show on NDTV Profit. I'm Tamanna and Anant. Now, this is a show that brings you information, insights on the mutual fund industry, but from your perspective, the viewer's perspective, so that you can make the right choices when it comes to your investments. The topic we've picked for today is mid-cap mutual funds. Now, why are we talking about mid-cap funds? Well, the simple reason is that they're a hot favorite. They've been giving excellent returns. But the question is that, are such good returns in mid-cap funds a complete given? If you look at how the mid-cap 150 has performed, and one of our experts on the show today pulled out data since 2004. We'll speak to him in just a bit about it. You have had, for every 10-year period, just twice that you've seen a return of over 20%. You've seen a CAGR of over 20%. So there is no sure shot guarantee that a mid-cap fund means you're going to get fabulous returns. There has to be some kind of realism. Now, the question we're posing today is, how long do you need to be invested in mid-cap funds to expect the kind of returns that we have been seeing? What's the 10-year view on mid-cap funds? To speak on this, I'm joined today by Satish Mishra. He's Fund Manager at Tata Mutual Fund, and Anant, Ladha, founder of Invest Aaj for Kal. Welcome to both of you, and thank you so much for speaking with us today. I'm going to actually start with Anant to set the pace and the context for our conversation, and then of course I will come to Satish for more on his fund and his philosophy on mid-cap funds. So Anant, let me begin with the basic premise that we're talking about. Mid-cap funds are not necessarily a sure shot way to great returns, to alpha returns, to double-digit returns at all times, isn't it?
Firstly, thank you so much for having me on the show. Very happy to connect and discuss over a very important topic right now. See, I feel mid-cap as a category is something which is something that an investor should always look at, because if we check out, we just have 150 stocks in mid-cap. And in last 5 years as well, over 20 stocks have related themselves and moved from mid-cap to large-cap category and have given a CAGR of above 25%. So mid-cap as a category is very important. And personally, it is one of my favorite category. But at the same time, we need to rationalize our returns expectations. Presently, I see a lot of investors having an expectations of above 20% return, since right now they have performed quite well, and keeping that expectation is something which might be a setback for investor. Having a reasonable expectations of 12 to 15% is somewhat more achievable in coming future, and be more realistic as compared to the present expectations of 20% plus returns.
Okay. Having said that though, Anant, in the last, I would say 2 years, you've seen superlative returns. Now, my question is that if I expand this time period to 5 years, 10 years, those investors are probably wondering that, are they going to see that kind of a momentum continue?
See, if we talk about immediately, I would say no. If we talk about in next 10 years, probably yes, because of the growth story of India. There is another interesting data which probably I have not shared with you till now, but last year we had one of the lowest number of negative days in mid cap and small cap index in last 20 years. And data suggests that whenever there is less than 100 negative days in mid cap and small cap, next 1 to 2 years, we see more of volatility in those index. So keeping that data in mind, I feel next 1.5 years can be volatile for this segment. But at the same time, if we look at 5-year or 10-year perspective, probably right now also it's a very beautiful index to invest in, because when we do SIP, volatility is in favor of investors. So we actually want that our index should be volatile, or our fund should be volatile. So yes, in next 2 years, we might see some jerks and some volatility in this index, but this is good time for SIP. Probably if you are thinking of doing lump sum in mid cap or small cap index, then you need to rethink it and look at from a valuation perspective as well.
Okay. Satish, let me come to you, and thank you so much for joining us on the Mutual Fund show today. As someone who looks at this space so carefully, fund manager at Tata Mutual Fund, you look at the mid-cap space so carefully. What is the challenge over here? Because an average investor who puts in money from a mid-cap, or a small-cap fund is coming in with an expectation baked in of superior returns, maybe superior than even the index, right? Because there is more scope to pick, etc. Is that the biggest challenge you face?
Yeah. So first, thanks for having me on the show. I'll tell you one thing. So for fund manager, the most challenging time is when you are not seeing proper corporate earning growth. So at least at this point of time, corporate earning growths are very robust. So that way, life is not so challenging. A bit of challenge is coming from the valuation perspective. So what is happening, as Anant also highlighted, in the last 1 2 years, there has been huge sharp rally. So many of the good stocks, they are not at all available at an attractive valuations. But still, we are not very worried because if you look at the economic fundamentals, the earning growth trajectory looks very, very healthy, even from a 3 to 5 year perspective.
So coming back to how you try and ensure those kind of returns, and what is the reasonable return that investors should expect? How many years should you be in one mid-cap fund to really get that alpha and to get into that purple patch of superlative returns?
See, on return perspective, I think we should always link it with the macro. So, for example, if you look at current India situation, and if say we are talking from a 5 to 10 years time frame, then we are looking for a GDP growth of around 7%. You add 5 6% inflation to that. So basically, at a country level, we are looking for 12 to 13% nominal growth. And when you talk about a category like mid cap, they are definitely in the current context when focus is more on manufacturing, when focus is more related to the upcoming themes, like for example, be that premiumization, urbanization, China plus one, multiple things. So in those scenarios, what you are going to see that earning growth for these broad-based categories will be slightly higher than that 13%. So I think roughly 15% kind of number, so 13 to 15% is a fair assumption on a long term. Basically, the situation where we are at this point of time, if one has this kind of number in their mind, probably there will be positive surprise to them, but not negative.
Um, the question then really is, how do you pick and what do you pick? Anant, let me come to you, because that is key. There's one school of thought that you pick your mid-cap funds and then you fill it, shut it, forget it. But does it make sense to have a sort of a rotational play? And how do you make the right decision?
See, before coming on to the selection pointer, I would like to put forward a very important disclaimer. If you are investing in a mid-cap fund for a 5-year SIP, then you should be ready that once in every 5 year, you will feel disheartened and your returns might be even lesser than your FD returns. It may be because suddenly market has corrected, or there has been some external news, or whatever may be the reason, but you should be ready for that kind of volatility, and probably that is the best time to put in lump sum also in your mid cap funds. So you should be ready for small amount of volatility, especially if you are looking to do SIPs for a 5-year time horizon. If you are doing 7-year plus, then probably you are in a more safer situation. While selecting fund, I feel you should not look at the best performer fund. You should look out for a consistent performer fund. You can probably search the data of quartile performance of funds over maybe 2 years or maybe 3 years, and then you can see which fund is in top quartile or upper quartile. That should be the fund you should be looking for. Never go behind the best performer fund in last 1 year, because we don't want a number one performer. I want a consistent performer. I want Sachin Tendulkar. I want Virat Kohli in my portfolio. I don't want a player who will play, who will score 100 in one matches, and then in next 4-5 matches he will screw my portfolio. So look out for a consistent performer. Secondly, always look at rolling returns. At times, I feel a lot of investors put a lot of focus on past 1 year or past 3 years returns. Rolling return is something which will give you a better picture. Third, when you look at risk, you should look how your particular fund has performed during bad times. What was the down capture ratio? Suppose if market has corrected by 10%, was your portfolio of that particular mutual fund in which you are planning to invest, was it down by 15% or was it down by 8%? This is something which can help you. And finally, you can look at the track performance of fund manager, how he has performed in overall market, how he has performed in other schemes which he's managing. This will give you a fairly good idea which fund to select.
Okay, so those are some of the ways that you select funds in the mid-cap fund as well. Satish, I wanted your perspective in what should be the time frame that investors should give to a mid-cap fund to get those kind of a return.
See, very clearly, if you are seeing past 5 years return more than 20%, what we are seeing currently, your time frame has to be more than 5 years if you are investing at this point of time. Otherwise, also, I believe these are the categories which are very good in capturing long-term return. So even in a general time frame, I think one should enter into these categories only if they have a 5 year plus kind of time period in their mind.
So 5 years plus time period in your mind, especially if you've seen more than a 20% return in the last 5 years. So don't time the markets and your investments, but definitely look at that kind of scenario. Now, it's a no-brainer that you should have an investment in mid-cap funds. The question is, how long should you give a mid-cap funds? And a mid-cap fund investment, and making an assumption that just because it's a mid-cap fund, it will do much better than its peers or will do superlatively well is not necessary, and that's what we've been discussing. Anant, just one quick question to you, and that is essentially on, we've talked about a 10-year, 5-year time horizon. What do you do if after a point you feel that returns are sluggish? How much time should you give before you decide to switch out of a mid-cap fund, maybe to a small-cap fund or another mid-cap fund?
For an average SIP, average number of days you should wait is 1400. So your average SIP duration should be 1400 days, provided the basics of the fund has not changed. You should at least give that much time to your fund manager. And even after that, if your fund is underperforming, you should probably look out for the reasoning of that underperformance. You would find reasoning in the portfolio. And if you feel that you have a better opportunity or a better fund, then probably you should make a call and take a switch. But at least 1400 average number of days you should wait.
That's an interesting number. 1400 average number of days is how you should wait. Satish, thank you so much for joining us today. Anant, I want to request you to stay on because we'll be taking queries from our viewers. And Vaddi Pavan Kumar, age 34, is our first query. So the goal is very clear that Vaddi has 50 lakh rupee returns and says, I have a 20,000 rupees SIP in Axis Blue Chip Fund. I can additionally invest 3,000 in a new fund for a long-term horizon. What is the suggestion? Yes, Anant.
So he's perfectly on track. Probably he is very good with his maths. 23,000 rupees SIP for 10 years will reach to a target of 50 lakh. So he is right on track. He can add on some mid-cap, or maybe to start off, he can start with a multi-cap fund. Right now, his complete investment is in large cap category. He can probably switch to a better multi-cap fund for a better exposure in the portfolio.
Okay, so switch to a multi-cap fund for better exposure. Any specific fund you have in mind, Anant, or any guidance on how he can go about, identifying that fund?
Right now, he's investing 20,000 completely in large cap. So I presume that he is a defensive investor. So probably he can continue his 10,000 SIP in a large cap fund. Balance 10,000 he can start in the multi-cap fund, which is comparatively defensive. For example, ICICI multi-cap or maybe Kotak multi-cap. These are comparatively funds which have performed better during bad days. So these can be the starting points, provided he is studying according to his risk profile.
Okay, at 34 years, quite a conservative risk profile, but there you go, Vaddi. That's the advice coming to you from Anant. All right, Deepak Manhas has written in, age 39, the goal is lump sum return. So he says, I want to start an SIP of 50,000 rupees to generate a corpus of 5 crore rupees in the next 10 years. Do I need to change my investment amount to achieve the goal? Interesting question. 50,000 rupees SIP, but the goal is a corpus of 5 crores in the next 10 years. Can you recommend a few schemes? So it's a very specific goal. And, Deepak Manhas seems to want to time it to their 50th birthday and have that 5 crore rupee corpus by then, because they're currently aged 39. What would be your advice, Anant?
Very interesting perspective of putting out the question. I really appreciate the way you linked it to his 50th birthday.
Yeah.
He has two
We
options.
all want to retire by that point. That's why. Maybe I'm projecting a little, but no, go ahead. Yeah.
Uh, Looking at his goal, he need 2,15,000 of SIP, or he has to increase his time horizon to 20 years. Here I am taking an average expectations of 12% CAGR. I know that I am being conservative, but I feel it's always good to be conservative, because if you target for 12%, you are getting 15%, you'll always be happy, and there'll be no dissatisfaction in your investment cycle. Versus if you target for 19%, 20%, and eventually you see a time where you get maybe 7 8% or below FD returns, probably you are more likely to make some bigger mistakes. So keeping 12% CAGR as an expected rate of return, 2.15 lakh is the SIP he need to do, or he need to increase his time horizon to 20 years. Looking at the portfolio which he want to make, probably he can select one index fund, one multi-cap, and a small cap fund. Plus, he can keep some corpus in equity saving or BAF like funds, so that whenever market give any opportunity, he can pump in some money and has some liquidity in his hand.
So would you say that this entire 50,000 rupee corpus should then just be in equity mutual funds, or look at other options as well? And what you're asking of him, Anant, to increase 50,000 rupees to 2 lakhs is a huge jump. It's a huge ask.
So we need to either reduce the target which we are targeting, or we need to increase the time horizon, or we need to increase the SIP. If you ask me to increase the rate of return, that is something which I won't suggest. So you can change any of the other variable, and you will be able to reach to your target, except the rate of return which you are targeting. And complete 50,000, I am assuming, looking at his question, that this is the corpus which he want to invest in mutual funds and equity mutual funds particularly, and for debt funds, and probably for debt or maybe gold, he has proper portfolio in place. So I have made that assumption. Plus, I said that some amount should go to equity saving fund or maybe BAF, so that he has some liquidity in his hand for bad times. So that is something which we should always take care, because when big opportunity comes, or maybe a jerk comes in market, we should have some liquidity to pump in some extra cash into the portfolios.
Okay, so it's a bit tricky. Maybe not your 50th birthday, maybe your 60th birthday, then you can hope for that 5 crore corpus. Shivam Agarwal is our next question. Yes, Anant, you wanted to come in on that?
No, absolutely. You are bang on.
Shivam Agarwal is our next question. Age 34, goal is lump sum return. Says, I can invest 10 lakh as SIP in mutual funds, and I'm expecting 25% return over the next 10 to 15 years. What schemes can you suggest? So 10 lakh more as a lump sum, one assumes, is what this viewer wants to invest in. Name is Shivam. And he's given some details. He says the existing portfolio has an equity corpus of 1.5 crores, gold and silver of 35 lakhs, fixed deposits of 1 crores, and crypto of 75 lakhs. So that's truly diversified. At 34, Shivam, you're doing a great job at your investments. So where does the next 10 lakh rupee go? Anant?
I think looking at his portfolio, he is planning to do 10 lakh rupees per month. And if he is planning to do that, probably he'll reach a corpus of 23 crores by next 10 to 12 years. And he can even reach a corpus of 30 crores plus if he's targeting 15% plus return. But keeping everything normalized, 10 lakh per month SIP plus 1.5 crores corpus, at 12% CAGR, he'll be able to reach to a corpus of 25 to 28 crores. And that's it. If he is having a return expectations of 25%, looking at present past returns, I think he need to normalize the returns expectations. Probably we have discussed about 10-year CAGR returns in last 10 years. He can probably use that data, or maybe he can look at the data of last 5-year CAGR returns or 10-year CAGR returns, how they have been in last 10 years, and then make a reasonable returns expectations. If he is an extra risk aggressive investor and want to actually reach to that 25% target, then probably he need to invest in mutual funds, keep that portfolio in lean, and use that money to reinvest in some strategies on or in stock market and need to generate some extra returns. I know I am asking a lot from him, but because his portfolio is presently also his portfolio is above around 3 cr, so I think he's a learned man and he can devote some amount in studying or improving his stock market skill and probably
It's
use
interesting
that leverage.
assumption, Anant. Because his portfolio is above 3 CR, you have assumed that he is learned. I mean, that could be inherited, that could be,
if he's earning 10 lakh rupees a month, I suppose he is doing something great in life.
Okay.
And he's
I
ready
think,
to learn.
Shubham, we should get you on the show because now we're all very intrigued about you. Now, the core question still was, if he wants to put an SIP of 10 lakh rupees a month, where does he put it? What funds would you recommend?
He need to use a combination of small cap, mid cap, multi cap. That's it. Plus, he need to ensure that he's investing some amount in BAF or equity saving category so that he can probably use that amount during market slumps or market bad days. And that is how his portfolio should be. He should even look at some of the select funds or emerging equity funds which are investing in a very concentrated portfolio. For example, SBI Emerging Business Fund, that's a very concentrated fund, but has performed really well over the years. Presently, as compared to its peer, it is underperforming, but it is a fund which has always bounced back in a very strong way. Even in 2017-18, I remember this fund was underperforming, but it has bounced back beautifully. So that is a kind of fund he can look at. In small cap category, he can have combination of two funds. One can be an aggressive fund, other can be a defensive fund. If you look at the aggressive category, presently Edelweiss fund or even Quants fund is very aggressive, but because of their aggressiveness and rich valuation, they can have some down days also. So at the same time, we need to have some defensive or comparatively defensive funds in the same category. Funds like probably ICICI Midcap is having a reasonable valuation and reasonable standard deviation. Even Kotak Small Cap Fund is also placed beautifully. So you need to use combination.
I noticed you didn't mention anything about his crypto portfolio of 75 lakhs. You think that should stay there?
See, I am not an expert in crypto, so I can't comment on that. So I hope you understand that we cannot know everything about everything. So I don't know much about cryptos.
Okay, fair enough. Thank you for your candor. But I thought it's interesting that there is a sizable investment in crypto as well. Thank you for joining us today. Anant there, Anant Ladha, taking time out to answer all of our questions and your questions as well. If you want to write in to us and send your queries, you know where to. Those numbers are on your screen. But for now, this is all the time we have on the Mutual Fund Show. Stay tuned. A lot more coming up on the other side on NDTV Profit.